Hey everybody, it's Warren and Julie. We are in Saranda, Albania,
Yeah.
and it's tax season if you're a US citizen. And it's mid-March, and April 15th is what we understand is typically the deadline for filing taxes. And if you're an expat, you're a nomad. And if you're thinking about becoming an expat or nomad and you're concerned about, hey, how do I take care of my taxes? What kind of things do I need to worry about? We decided to do a special video today with a professional tax expert that works with expats and nomads. And hopefully we'll get some answers for any questions you have. And okay, Ari doesn't want to be in the video at this point, but we're going to continue on with our guest today, the tax queen, Heather. And so, Heather, how are you today?
I'm good, thanks.
Well, thank you for joining us. Heather, first off, how do people contact you as far as an email or a website?
Sure. So my website is tax-queen.com, and you can reach me through my contact form on there, or you can send an email directly to support@tax-queen.com.
Okay. And Heather, you've been working with expats and digital nomads for how long, and what's your background on this?
Sure. I think I'm in year 10. I can't believe that, but yeah, year 10. And the reason why I picked expats and nomads really is because I am a nomad myself, and we love to travel. My husband and I have traveled for many since 2016, off and on, full time, part time. So that's why I connect, I resonate, I understand the lifestyle, I don't question things. And I actually love to hear all the different stories and how people make it work, whether it's owning a business or being retired and, living off Social Security, whatever it is. I love all the different methods and ways that people travel and make it work. So,
Well, super. Well, I've got some questions for you, and then I'll let you kind of you know, throw anything else out there that maybe we don't ask you about. But
sure.
we have nomads and expats. Some people are just flying all over the place, and they could be driving, they could be flying into different locations, and they don't have a central location. They don't have residency. Do they get any kind of special perks for being outside of the United States, even though they're not residents anywhere, that they're just on the you know running around Europe but outside the country?
Sure. So the IRS in the US sees it as if you spend 330 days outside the US, 330 out of 365. Again, not in a calendar year. It doesn't have to be January 1st to December 31st. It can be May 1st to April 30th. As long as you spend that amount of time outside the US, you could qualify for the foreign earned income exclusion based on that physical presence test. So that foreign earned income exclusion has, number one, the physical presence test, and number two, a bona fide resident. So if you actually have legal residency somewhere else in another country, you could qualify for that as well. And the whole physical presence test goes away because you're now a bona fide resident. So those are the two.
So when we say foreign earned income and getting credit for that, does that mean that that income has to be earned from a company outside of the United States, or can you earn company or money from a company inside the United States that you're working for, but you're outside the United States? What are the parameters of that qualifying?
Sure. So physical presence test, if you are outside the US 330 out of 365 days, it counts. It doesn't matter if the company is based in the US or not, because the work is physically being done outside of the US. And that's how they're explaining it. We'll give that, yeah. It doesn't matter, if it's a Spanish company or Japanese company, US company, it doesn't matter. It's being done outside the US. So that's why
Okay,
that
cool. So,
works.
Julie and I basically we're nomads. We do have a home base in the in Montenegro that we utilize, but Florida is our home state. So if we were to um, have been filing as though we're in Florida all the time, we may potentially then be getting extra taxed if we
You could be, I don't say extra tax, I say you're missing out.
okay.
You could be missing out on a deduction. So the other thing to be aware of is if you are self-employed, so whether you have an LLC or just operate as a sole proprietor, doesn't matter. You're still going to pay Social Security and Medicare tax. So that foreign earned income exclusion is only income tax. And you still have to pay your self-employment taxes, which is your Social Security and Medicare. So sometimes people say, why? And there's limits as well. So it's 120,000 in 2023 because those are the numbers in my head because it's tax season. It goes up each year, so just be aware of that. So for 120,000, if you're under that amount, but you're self-employed, you still might owe tax because you have your Medicare and Social Security that you have to pay.
Okay, so that's fair enough. And so that's like your 14 whatever percent in there for your personal and the employer side of that.
15.3%. Yeah.
15.3.
Yeah. Yes. There we go. Okay. So people may be working and have residency. Maybe they have a business in another country. Maybe it's a restaurant, a bar, a hotel. They are they're not citizens somewhere, but they've got their residency and they have a tax obligation to the foreign country that they have their business in. Do they get double taxed at all from the United States, or what is the typical rules here?
So they could qualify for, number one, they could qualify for foreign earned income exclusion if they have residency somewhere, which chances are they do if they own a business somewhere. But if that country is taxing that income, you get a direct foreign tax credit. So there's two different things that we can look at. If you're paying, I don't know, $1,000 or $5,000 to another country, you immediately get that as a credit on the U.S. return. So even though they're going to tax that income from that business, so like that restaurant income goes onto your US tax return because we're US citizen. We pay tax on worldwide income. And let's say you have a $10,000 obligation to the US, but you paid $5,000 to Spain because that's where your business is, you immediately get $5,000 knocked off of your US obligation because you already paid that to Spain.
Good news.
I'm just picking Spain, just picked out of a hat, didn't
No, that's good news, I'm sure, for some people, at least a relief for maybe some people listening in here.
I can also just say some people that have investments, so stocks and other kinds of investments, there's actually foreign tax paid. And some people don't realize it maybe because they're using a financial advisor and they're not necessarily aware of every single thing that's happening in their portfolio. But I see it even just on regular US citizens living and working in the US, they get credits 10, 20, 300, 400, $500 depending on their investments. So that is, yeah, immediate dollar for dollar credit.
Well, I guess this kind of can lead into let's talk capital gains. People go overseas, they buy a property, but maybe it's for vacation purposes, maybe it's where they're going to home base from or live in or use as an Airbnb, and maybe at some point they sell it. So I guess like maybe we could talk about Airbnb income, and also if they sold a home after owning a home, what kind of obligations does this, Uncle Sam require of them?
Sure. So there's two different things we're talking about. Running an Airbnb is actually running a business. And again, you have to pay tax on that in the US. It's a rental business. But if you just buy the house for you and your family to use, however often you're there, it doesn't matter. There's no income, right? So we don't have to pay taxes on that. But when we go to sell it, you do. So if you hold it for over a year and a day, it's long-term capital gains. And if you hold it for less than a year, it's just ordinary tax at ordinary income levels. So those are the bracketed system that we have, depending on how much money you earn that year. And when you go to sell capital gains, right? So if you have a house and you make $50,000 off of it, and you made $50,000 off of business or W-2 job, now you actually have 100,000. So sometimes people get a little confused over that. It's your entire income that makes up the capital gains rate.
And so there's different brackets on capital gains if you're a single or a married person. If you took a profit on a house and you didn't have stocks to put into there, what would the parameter be for like a 0 bracket and the 10% bracket or whatever you have on these?
Sure. So at I'm looking at 2024 rates because that's the year we're in, even though we're filing 23. So if you're married filing jointly, the 0% tax bracket's up to 94,000.
Mm-hmm.
That's if you're single, we're at the 47,000. So as long
So,
as you stay under that, you would be 0% capital gains.
okay, so
And
it's a
then
half basically. If
yeah,
you're
pretty
single and a couple.
pretty much. And then I'm looking at the 15% rate. So on the single, it's 518, almost 519, 518, 900. So I think most people will stay in that 15%
Mm-hmm.
on average. And if you're married filing jointly, it goes up to 583, 750.
Yeah,
So again,
so it's not going to be doubled for the married. It's just double for this for that lower bracket, and then it's goes up a little
yeah,
bit for the jointly and the single.
yeah. That is a stark difference. I know I don't usually look at the numbers right next to each other like that, but yeah, that's a stark difference. But generally I see the 15% tax bracket unless you're a really high income earner, or have a really expensive property that you sold.
Well,
Um,
we may have some millionaires and billionaires with from the Montenegro Yacht Club watching if if they're over that where they go 22% later on
20%. It's
20%.
maxed at 20. Yep.
Okay. Okay.
And actually, so I always like to point this out for the person who's higher income. It's maxed at 20, and that actually becomes your entire tax bracket at 20%. So it's actually advantageous to have capital gains because your entire income is taxed at that level.
Oh, okay. That's something I
Less.
wasn't aware of. I need to I guess get into that bracket.
Yeah.
I
Someone
need more
even at
subscribers for that to happen,
15%.
okay? So
Yeah. Someone at 15, someone who's making 500,000 is not going to be in the 15% tax bracket. Well, there is no 15% tax bracket. So again, it's still advantageous to have capital gains that pushes you into 15 versus your 30%. Does that make sense?
I was surprised to find out that we can file because we're out of the country later than April 15th. Is that
Yes. Yes, a little bonus. I like to say it's a bonus. So anyone who's out of the country on April 15th, you have until June 15th to file. So you get an extra 2 months, but that also gives you an extra 6 months to file. So you technically have until December 15th if you file.
wow?
yes, if you get an extension.
Mhm. So just be aware of that. A lot of people like that, but your taxes are still due April 15th. So if you're going to owe taxes are always due April 15th. The extension is time to file, not time to pay.
Okay, so if you have the extension to file, but the deadline was the 15th of April, but you're extended or you can wait till June to file, how do you pay before you file?
Penalties?
You can skip the payment and just pay the penalties when you pay in when you file in June, or you can when you file for an extension, there is a part on it that you can say I'm paying X amount of dollars. So if you think you're going to owe $5,000, make a payment of $5,000 when you file for the extension.
And it would just get refunded if it's
Mhm.
overage? Okay.
Correct. So I
Well,
usually like to say pay over because I don't like to see people pay penalties and interest. So yeah, pay the over amount and then you'll get it refunded when you go to file.
and I guess something that's spooky for a lot of people is putting money in a foreign bank account, especially go over 10,000. It seems like there's all this worry about having money in a bank that is foreign owned and assets overseas, and you have this extra filing that needs to happen if you're over 10,000 in value, and I know that when we've done with our foreign bank account, putting money in there, we have to tell them why it's going in there, and you feel like you're having the Inquisition, even to take your own money
You
out.
feel like a criminal even though you aren't a
Yes,
criminal.
yes. If you feel like you're a money launderer, and it's like, well, we're doing a remodel, and we have to buy furniture over here, and
Sure.
and so when you have the bank account over 10,000, does the IRS cure, and what do we what needs to be done on a foreign bank account?
Sure. So it's just a filing, it's just reporting. There's no tax or anything. And it is due April 15th, the same thing as your tax return. And it's called an F bar. and it's just foreign bank reporting. And we'd say 10,000 is US. So any 10,000 US dollars. So if you had 5,000 euros, right, you're not hitting the 10,000 US. Even sometimes 10,000 euros, or well, we're kind of even right now with euros. But there's all kinds of currency around the world. So just make sure it's 10,000 US over.
Okay.
And it's just reporting, it's reporting the bank name, where your money is, and what was the highest value during the year.
Okay.
So it's
So
it's really not scary. I don't think it's scary.
okay. So it has nothing really to do with your taxes per se. It's just the same timeline.
It's just a
It's
reporting.
the same deadline. And then tax professionals can actually help you and file it online with you or for you. So that's why it can go along with your return as well. So
Is that form available through the regular IRS website, or is that through a whole different agency?
it's through the FinCEN. Yeah. So it is fincen.gov, and the FinCEN stands for Financial Crimes Enforcement Network. And so that's why it is just reporting the information. They're basically trying to stop shell corporations, terrorists that are maybe moving money, things like that's the whole goal.
So that's why it sounds spooky when people like, oh, I've got to fill out this form for this agency, and that's why you feel like a criminal when you're not
Correct.
doing anything wrong.
Correct. And so a lot of people that are outside the US that do have 10,000 or more in value outside, they don't know about this filing. And so they go maybe 5 years, 10 years. I have filed, the most I filed is 6 years back because that's all they require. And if you do a catch up, so at one time, if you say, I did not know that this was the requirement, Heather, please help me, or whoever, please help me. We filed all 6 years together at once, and you are now caught up. And the reason why this is really important is because there is a $10,000 fine penalty for failing to file this form. I have never once seen it enforced, but that doesn't mean that it wouldn't happen. So if you do a catch up and you file every back year that you have, again, up to 6 years, that's all they care about. You avoid any kind of questions or penalties. They allow that.
Okay. Let me ask you about people that do residency by corporation. So people get residency in different countries different ways. Sometimes it's by home ownership. Sometimes they open up a corporation. So I'm going to use Montenegro because it's a country I'm very familiar with. So let's say you are getting your residency in a country and you're opening a corporation. And under this scheme, oftentimes you have to pay yourself a minimum salary, and then you have to pay tax on that minimum salary. So you could look at it and say, okay, I'm just going to basically only be out of pocket maybe 200 euros a month. I'm not really out the entire salary. It's just 200 a month, and that gives me my health insurance or part of the social system or whatever. And now I've got my residency. So if they're paying themselves, let's say 1,000 euros a month in salary, but it's just going right back to themselves, is that income now counted in the income for Uncle Sam?
It is. So you'd have 12,000 US dollars salary in the US.
Okay. And would that be able to be applied to the foreign earned income credit as well?
It can. And chances are you're paying tax, I'm guessing, be paying taxes in your case, let's say to Montenegro, but whatever country it is that you have that business. So again, you might get that foreign tax credit.
Okay. Yeah, I think that's like I'm just throwing out what might be the minimum.
Sure.
Even be lower than that on the minimum, but some countries could have something much higher.
Sure.
So so however that scheme might work in the country you're looking at residency in, or if you have a corporation out there, then different rules will apply. With a lot of these questions, of course, we're hitting trying to hit the targets, but we may be missing some of the nuances to some people out there. So if you do have questions, I want to remind you that Heather is a tax professional, and we will make sure that if you want to reach her, that you can reach her at this email here. And if for some reason you watch this video and you forgot to look at that, you can always shoot us an email. You can find us in our website at warrenjulie.travel.com, as well as on our Facebook group, or email us at warrenjulietravel@gmail.com. but we'll be glad to get you in touch with Heather, but you can go directly to her as well and, try to see if she can work with you if you're looking for a tax person. And are you available at this point? I mean, we're in crunch time for you.
So we are in crunch time. I'm happy to help nomads that are outside the country because we do have that June deadline. My April deadline is pretty booked at this point. So
Okay. Are there questions? Are there things that we didn't talk about that we should have talked about that you deal with?
one of the things I think is really taking travel expenses and touching base on that. And some people like yourselves are doing content creation around travel or around being nomads or any other kind of topic, sailboats. I mean, you name it, there's content creation, right? So just being really cautious about that. And that's a really individualized situation. And having a home base is advantageous if you're trying to take some travel expense because you're basically giving yourself a tax home. That's how the IRS defines it. If you do not have a home base and you are always nomadic, so you're just moving, spending a month here, a month there, I would not take travel expenses. Travel expense, that's a lifestyle choice, I like to say, and it's a great one. I love it, but it is a lifestyle choice.
So where we don't have residency in Montenegro, but we do use it as a home base, we still qualify with that being a home base?
Mhm.
Okay, so for those of you that are doing like us, doing the Schengen Shuffle and you're not doing residency somewhere, that's a potential thing there for you.
Yeah, and I can use even myself as an example. My husband and I were full-time RVers, and I ran this business. I never once took travel mileage, you name it. I never took anything because it was our lifestyle choice to drive around the country, to drive into Canada. I wasn't for business purposes. Even though I occasionally did go to a conference or things like that, that I never took it. We now have a home base. And so now when I drive, if we hop in our van and we drive to a conference for me to speak, I get to take the mileage. If I were to go to Spain and speak on a conference on taxes, same thing. It would count. So that's, I like to give, if I can actually give my own example of my life, I can't share my clients' stories, but I can share my own. So that's a really great example, just showing the difference now that I have a home base. And it's basically the way that the IRS looks at it is that you're always returning, coming back to that spot. That's how they look at it.
Okay.
Very cool. Any questions, honey?
No, I think she was great. She answered everything.
Yeah, Heather, thank you for doing the video. I'm sure that, around 70% of our audience is from the US. And so I'm sure that this is going to be helpful for a lot of the folks that are watching the channel. And we appreciate your time.
Thanks for having me on. This was fun.
So as a reminder, everybody, Julie and I, we're traveling the world with our two dogs. We're trying to see what it's like to live in different countries, different places. We're trying to share our experiences and expenses with you. So we hope that you're going to subscribe, give this video a like, share it with somebody that might benefit from the information here as well. And until next time, have a great day, everybody. Bye-bye.
Ciao.